Hej och välkomna tillbaka till Erik Penser Banks Bolagsdag. Igor Tubik heter jag och är aktieanalytiker här på banken. Med oss här idag så har vi Gudmundur Palmason från Strax som ska presentera bolaget och presentationen kommer hållas på engelska. Gudmundur, very welcome.
Thank you, Igor. Thanks everyone for having me here today to present Strax. As Igor said, my name is Gudmundur Palmason. I am the CEO of Strax. I'm also one of the two largest shareholders of the business, along with the founder who founded the business back in '95. I joined in 1999, so I've been with the company for quite some time. Strax is all about building brands, consumer brands in particular. We operate in three segments: personal audio products, where we have brands like Urbanista. We have tech accessory brands or mobile accessories. We own a brand there, for example, called Ritzman & Fins. And then, as a response to the pandemic last year, we pivoted into a health and wellness category when we saw that our core businesses were somewhat being challenged by the COVID pandemic. So we utilized the existing organization to pivot into a new product category in health and wellness products. As I said before, the company was founded 25 years ago, so we've been around for a long time. We are very much a global business. We have offices in Asia, in Europe, and the US. Turnover in the last 12 months, ending in September, 117 million euros, roughly 5.5% EBITDA ratio, which has unfortunately dropped in our recent quarter, where we faced a lot of headwind. But in terms of sort of the scope of Strax, we do sell and distribute products into 75,000 doors, or retail doors, like a Telia store, etc., across multiple markets and all around the globe. So we are, again, very much global. Historically, we've also been fairly sort of acquisitive. We have acquired companies, and we've also sold a business, which I'll get back to later. We are a part of the smartphone market, so accessories or tech accessories, audio products, maybe with the exception, of course, health and wellness products, very much a subsector of smartphones. So smartphone sales globally have sort of plateaued in recent years and took a hit last year due to the pandemic. We believe, and analysts agree, that once sort of we have moved past COVID and we moved past sort of the global component shortages we're facing today, that smartphones will continue and again growing as of next year. But still, if you look at the installed base of smartphones out there, there are roughly 4.5 billion phones in use globally, and so you can say that that's really the target market for Strax. 4.5 billion consumers have smartphones that we can attach products to. The global accessory market is also expected to grow. It has taken a hit. Two factors causing the mobile accessory market to grow. One is people are buying more accessories per device. And people are also buying more expensive accessories, and that's particularly driven by personal audio and true wireless products. But a very big market expected to grow healthily in the next few years. Another subsector of the smartphone market is AirPods and the true wireless segment, where we have three brands. And that market has grown heavily in the last few years and is expected to continue to grow at a healthy rate going forward, which we are planning to be a big part of. I told you in the beginning that we have been facing quite a headwind in the last, I would say, 18 months, ever since the pandemic started. Generally, I think we've done well. We managed to grow our sales in the first 9 months of this year. But there are a lot of tough, and I would say brutal, conditions out there. We are faced with heavy component shortages across all of our audio brands. We have shortages of mobile devices in the market, smartphones in the market. We've seen increased input costs, such as freight costs. We've seen increased cost pressure out of our vendors. At the same time, we've not increased yet, at least, prices to our customers. But that, I would say, we're trying to hold back, but I would expect us to change that now in the next few months, since we have to react to these price pressure. And we've also been faced with unfavorable product and brand mix, which has impacted our average blended gross margins. How we do business, we're very much a twofold business. On one hand, we own distribution, meaning we have a proper warehouse in Central Europe where we service all of our European customers out of, including in the Nordics. And then we own the brands I told you about before. But we have in sort of the supply chain also third-party brands like a JBL or a Jabra, which we also distribute to our customers along with the brands like Urbanista. So it's an integrated business model, and we believe there are benefits of having an integrated business model that sort of allow us to maneuver in ways that we would probably not be able to do if we wouldn't have this twofold business model. We have just a quick one on this one. So we acquired a brand in 2015 called Gear 4. At the time, their sales were 1 million. We scaled that up exponentially. In 2018, their sales were $23 million from cases. And when we acquired the brand, we never planned to divest it. But we were approached by a big US company that acquired it from us for roughly 34 million euros. And we had acquired the brand for 5. So this just shows you the potential in the broad reach we have globally with retailers to take a brand and scale it up fairly quickly and divest if, of course, we get interest at the proper prices. Our growth agenda is also very simple. We believe the market will grow, or our addressable markets will continue to grow. We want to grow the brands we own. That's really where we create value. Of course, when we distribute brands, that's good as well, and we provide a service to our valuable customer base. But we are also focusing a lot on growing our own brands, because margin-wise, that changes quite a bit when you sell your own brand and you capture the full margin chain, versus when you distribute a third-party brand, you really are leaving off the table the margin that that brand is particularly making. Eventually, we also have to figure out how to play in e-commerce. We've spent a lot of money and lost a lot of money on e-com. I always say it's easy to grow online, but it's very difficult to do that profitably. We have spent probably a few million euros on trying to establish our brands online. And obviously, when we face the lockdowns in Europe of our traditional retailers, if you look at April, May, June last year, 85% of the retail doors we sell to were closed. So we obviously try to pivot quickly online, but that sort of, in hindsight, that was a very expensive exercise, and we've lost a few million on an EBITDA basis by trying to grow too quickly online. We will continue to address the online channels, both on a direct-to-consumer basis, but also through the retail partners we have. Again, like a MediaMarkt or Elkjøp, etc. So we will enable them to sell through their online platforms our products. Quickly on our brands, just a summary slide on most of the brands we own. Urbanista is the biggest brand. Urbanista has, however, particularly been impacted badly by the pandemic. So we, in 2019, we generated 23 million euros roughly in sales on Urbanista, which has now fallen 2 years in a row. And we have realized that Urbanista needs, and largely sort of is a retail brand, traditional retail brand. Nice presence online, but again, growing that brand online is a particular challenge. So we will focus on growing Urbanista and traditional distribution and retail. Other brands, Clicker is a so-called attachable brand, which we have a strong IP around. It allows you to consume and create content without using sort of your hands. So it's a basic stand function on a device like this, where if I wanted to videotape myself during the presentation, I would use the clicker. And also when you go on flights, you can then go into a horizontal mode and view your videos, etc. So this, we've had a strong uptake in the US and have excited about the potential of that particular brand. Other brands, I'll talk in more detail about our two latest audio brands, being Grell and Dottir. Dottir is a brand we just recently launched, and we have high hopes that this will do well. And this is an online-only brand. And why will an online-only brand do well, but not Urbanista, for example? Main reason is that we're not faced with competition from the broad distribution we have, but also we have targeted here and teamed up with ambassadors that have a large group of followers on social media. Similar strategy on another brand we just launched, a completely different positioning called Grell. Here we have teamed up with a world-renowned audio engineer, Axel Grell. He has a strong core following after having been the lead designer at Sennheiser for over 2 decades. So he has a strong following and sort of a big name in the audiophile world. And we've also teamed up with a community in the US called Drop.com, which has in excess of 7 million members in its community, which we will target through the Grell brand. So again, online-only brand, we won't have competition from traditional retail. Licensed brands, we also do licensing. We have global agreements with the likes of Adidas and Diesel, where we sell both cases, speakers, headphones, etc. So this is a good standalone business for us, and it gives us tools and products that nobody else really has, so a differentiation factor. Quickly on the distribution, we focus on Europe. We have a strong, stable European distribution platform that's done pretty well throughout the pandemic. This is a business that generates 65, 70 million euros in sales at reasonable profit margins, but has been very stable throughout the whole pandemic, whilst the own brands have suffered quite a bit at the same time. But stable, ongoing business, which we've had since day one within Strax. Also addressing the global marketplaces, we acquired a company called Brandwell a couple of years ago that specializes in listings on Amazon and other online marketplaces globally. We've also been challenged from a profit point of view here. Amazon and the likes are expensive platforms to deal with, but more importantly, price erodes very quickly. And we've had a challenging time having broad distribution because many of the smaller retailers and bigger retailers, as a matter of fact, sell through Amazon, which we are often competing with on the brands that we own, but we cannot control them in a way that keeps them out of Amazon and other marketplaces. So it's been a little bit of a challenge to build this business, but still strong growth. And this is a platform that we sort of going forward believe will develop in a profitable way. Quickly on the financials, nothing really to communicate. We've sort of grown historically with the exception of last year, where we saw a decline in our mobile accessories of more than 20%. So the core business declined as a result of COVID, largely more than 20%. We were able to set off a big part of the decline through sales of health and wellness products, but still not completely filling the gap left by the drop in accessory sales. But we believe that we sort of have a fairly good platform to grow once the markets normalize post-COVID. And normalization means obviously no lockdowns, sort of supply chain issues will be behind us, freight costs will normalize, etc. So I believe we have super brands and a great distribution platform that really can scale and grow in a profitable way once we've moved beyond the pandemic. Strax is an investment case. I always say that it's a great example of a business where the sum of the parts is significantly greater than the whole. And when we divested Gear 4 back in 2018 for 34 million, the value of Strax, or the market capitalization of Strax, was 28 million. So we divested one brand for a bigger value than the market capitalization of Strax was at that time. And I believe we have the potential, of course, moving beyond and looking forward to repeat that exit, if you will. Thank you very much.
Thank you, Gumi, for a good presentation. And now over to the Q&A session. And first of all, I would like to ask a little bit about the market. We have recently seen that, some across Europe, we have seen some countries starting to, put in some restrictions again. How do you believe that this will affect Strax in your core markets in the near term?
We know it's going to impact us negatively. That's a given. We don't know how sort of the extent of the lockdowns going forward, obviously. But if you look at lockdowns in the last 18 months, countries like Germany were closed basically, or the majority of our retail partners in Germany closed their doors in excess of 200 days. And if the doors are not open, we're not selling our products. But things are changing so fast now. UK, which also saw lockdown days in excess of 200 over a period of 1 year and a quarter, I don't believe they will go into lockdowns. You see now Netherlands already implementing lockdowns, and they are probably going to extend the initial period they sort of had indicated. I just hope that Germany and France and Switzerland won't go into lockdowns, but who knows? Things are changing so fast, unfortunately, and this will impact us. We have, however, of course, tried to divert and divest a little bit the exposure to retail. So enterprise customers have sort of grown in importance. And then on the flip side, health and wellness sales should increase. So we can hopefully, again, what we did last year, set off a decline in core accessories and audio products, set that off with health and wellness products.
Mm. And on the online sales, you have a quite ambitious target to increase the online sales by 50% in a 2 to 3 year period. Do you have anything to mention there? Have you thought about the strategy, how you will move towards that direction, or?
Yeah, of course, we think about that every day, because we realize as a company we have to be able to generate a significantly larger proportion of our total sales online. We have tried methods that didn't really work. We are hopeful that the 2 new brands we just launched, Grell and Dottir, we will have more success because we won't have direct competition from traditional retail and the marketplaces. And also marketing sort of to a captured audience through the following, social media following of the brand ambassadors of Dottir, and then Grell through the drop collaboration as well. It will be a sort of game changer, in our opinion, when it comes to online sales. And what we're also focusing a lot on is how do we empower our traditional retail customers, again, using the likes of Elkjøp. How do we enable them to focus more on our brands and sell through their platform, because they're getting the traffic. The big expense is driving traffic to your website, and they have a captured sort of audience and footfall on their e-com platforms, just like they do in the traditional stores. And we're focusing a lot on how do we enable them to sell more of our products through their own online presence.
Mm-hmm. And on that topic, you launched 2 new brands now in Q2, right? Dottir and Grell. How has the response been from the market, would you say?
So I can only talk to pre-orders. We have seen delays, again, coming out of these component shortages globally. We have seen, unfortunately, delays in the launches, or real product launches of these 2 brands. But pre-orders have been exceptionally strong. So hopefully we can start shipping and getting products in, so we can start really engaging with our customer and target customers. So we're very optimistic that this will be a great success.
And if we look then on the supply side, do you see any improvement there, or would it stay there for a while? Do you, how to say? believe that it will continue to be some difficulties for a longer period, or do you see any light in the tunnel, so to speak?
We certainly, in the very short term, haven't seen any improvements. Our expectation and the way we see it is it will be challenging until sort of second quarter, third quarter, and that can easily be pushed back if sort of lockdowns and pandemic continues to impact the global economy and sort of industries in various different ways. And unfortunately, that's just the sort of reality we live in. But sort of longer term, I'm very optimistic that this will subside and normalize. But sort of short term, mid-term, I can't really tell. But we expect at least until sort of back end of Q2 and sort of in starting second half next year that things will start to sort of come and normalize.
Yes, and if we look at the distribution business, you mentioned in your last report here that you're looking at the possibility to split the distribution business.
Yeah.
Can you elaborate a little bit about that?
Yeah, we sort of given what I said here earlier, that Strax is a typical sort of sum of the parts example in a way that we've not been able to sort of cut through with the market, that you should value Strax sort of as two independent businesses rather than a consolidated group. And we feel strongly that the distribution part is significantly sort of overlooked as a value in our valuation, if you will. If you look at the peer group of distributors, they are trading at very high multiples, and we're not seeing that through our valuation. We also sort of through and we're obviously just in the sort of early evaluation stage with that sort of split and concept. But we also, by separating the two, I believe we also achieve a significantly more focus on the own brands within the then remainder of Strax, and that in itself will create value on the brand side. And these are the kind of things that we're looking at currently, and it will reduce complexity. We have sort of sometimes internal challenges by having brands that we own and distributing brands. There are inherently conflicts associated with that, so that will also create a full separation, and you won't have these conflicts anymore.
And then also on that topic, do you have any plans or any thoughts around expanding, the products that you are offering through the distribution channel, or would you still continue to focus on the mobile accessories?
No, we definitely have, and that's maybe the third element of sort of the rationale for looking at a split, is to really, because again, we're continuously evaluated on a consolidated basis. So if we start distributing products in other categories like a hardware, there the margins are 5 to 10%. You can just imagine if we go into smartphone distribution at 5% and achieve significant volumes, our average blended margin will come down pretty quickly. So we've stayed away from a lot of categories because of this integrated business model. So there are a lot of categories out there in gaming accessories, in IoT products, etc., where we have a customer base, large retail customer base we can address with new product categories, and that's definitely a part of the strategy if we do go ahead with the split. As well as there are a lot of opportunities to grow through acquisitions in sort of more the distribution space, and that's something we will entertain as well.
And then the final question from the audience here: are you planning to expand into new geographies or?
No, I don't think so. I think we cover, well, never say never, but that's not a part of the strategy today. Europe, we are in Europe. There are, of course, markets where we don't have an organization. We don't have presence in Spain, for example. We don't have presence in Italy. We are not as strong as we would like in some markets. We've had a tough time sort of distributing in the Baltics, So there are areas that we are weaker than others, but I don't see the real need of a sort of pure geographic expansion today. Our brands are sold globally, so you can find Urbanista in Australia, in Canada, in Mexico, and all over, but you don't need to have a sales force or an organization locally to really take advantage of sort of distribution.
Gumi, thank you for taking the time and being here with us.
Thank you very much, Igor.
Tack så jättemycket för att ni tittade, och vi tar väl lite break.